Let's now start solving question number 5A from our May 2025 examination of CA Intermediate. This question is on Accounting Standard 21, Consolidation of Financial Statements. Slightly as a matter of surprise, they've asked you to do consolidation of PL and they've not asked balance sheet. It is a pleasant surprise, not a surprise that will take you by shock and then what to say, an element of sadness. The reason is consolidation of PL is much simpler than consolidation of balance sheet. Number of adjustments are very less. However, there are a couple of tricky points. If you would have done the class regularly, you would have definitely be able to crack this with ease in the examination. Let's see. Bird Limited and its subsidiary Rooster. So, who's the holding company? Bird. Who's the subsidiary company? Rooster. So, who should prepare consolidation of PL? Bird. They've given data. This has lot of items which are relating to assets and liabilities also. They've given the capital so that we can find the percentage of holding and percentage of subsidiary. Why would we need it? After we prepare consolidated PL, at the end, we'd have to transfer the portion of the holding what minority hold. For them, whatever the share in the profit of subsidiary that they get has to be deducted from consolidated PL. For that, we want percentage. For that reason, they've given us the equity share capital of both companies. Understood? Let's proceed. See the end of the question. What exactly do they want us to do? Like I mentioned at the beginning of this video, we need to prepare consolidated profit and loss account of Birds and its subsidiary Rooster Limited. If in case you haven't revised, please do revise how to prepare consolidated PL using the revision video, and then you can surely come back to solve this answer. We'll mark the items with adjustments quickly and then start with the answer. So this is with regard to shareholding. This will help us identify how much percentage of the shares is held by holding and how much is with minority. This for the closing adjustment. Then there is some adjustment with regard to dividend. Do we have dividend anywhere? Yes. Dividend income. Who gives dividend to whom? Rooster Limited paid dividend. Rooster is subsidiary. So holding company's dividend income will change slightly. We should check whether it is pre or post and then adjust. That's the first one. Then we have some adjustment with regard to rent. Rooster Limited pays rent. So in the Rooster Limited's column, we have rental expense. No, we don't have rental expense. I will assume that it is included in general and administration expenses. And for the holding company, it will be included in rent received. This is an intercompany transaction. It will be eliminated from the expense as well as income. When they act as two different entities, it is expense to one entity, income to another entity. But when we prepare consolidated entity, that has to be eliminated from the expense as well as income. Expense of the entity paying, income of the entity receiving the money. Do you agree with me? I'll just mark the star so that I can keep the money in your column and I will anyways adjust it later. Selling and distribution expense of Rooster include 15,000 received from Birds. So Rooster is subsidiary. Selling and distribution expense. So this includes some intercompany transactions. For subsidiary it is expense. For holding it is income. Income, what income will it be included in? I think it will be included in non-operating income. I have marked all the adjustments in the data required for PL. Now I'll start with the answer. To begin with, equity share capital is 10 lakh of Birds, which is actually of no use. Do we need equity share capital of holding company anywhere? No. But I would need that of subsidiary, 3 lakhs. Why? This has to be split. So, after my consolidated PL format and notes to accounts, I'll draw one format wherein I'll identify the subsidiaries share capital analysis. So, how much is the share capital of subsidiary Rooster Limited? It is 3 lakh rupees. I've written 3 lakh here. This will be split between holding and minority so that we'll identify the percentage. I'm going to do this later, not right now. What do we have next? Sales. Sales of Bird, sales of Rooster, both will be added. 28 lakh 40 and 10 lakh 40. Can I call this as revenue from operations? So I will write in my revenue from operations, note number 1. How much is sales of Birds Limited? 28 lakh 40. How much is that of Rooster Limited? 10 lakh 40. I can take the total right now to post it to outer column in my consolidated PL, but I'll still keep it here. I'll total it later. Why? What if there is some sales return? Then I would have to adjust it here. Okay. Next, we have purchases of finished goods. Purchase of finished goods of Birds 9 lakh 15, Rooster 1 lakh 75. They don't have any intercompany sales. If it was there, I would have eliminated from sales and purchase. Now I'll write this purchase of stock in trade as a separate notes to account. I would write here purchases, that of Birds Limited 9 lakh 15. Am I right? That of Rooster Limited 1 lakh 75. Putting it together, how much is it? It's 10 lakh 90. Everybody got this? I'll keep this in the inner column. I'll not post it to consolidated PL right now, because what if there is adjustment of purchase return? It's not there, but let's be ready for it even if it's there. Then we have next salaries. Salaries will come in employee benefit expenses of both the entities put together. I'll write it in my consolidated PL. There are no adjustments also. So I would write another column, other notes to accounts called employee benefit expenses. Salaries, that of Birds Limited is 7 lakh 75. That of Rooster 3 lakh 78. Together 11 lakh 53. Is that right? Then, okay, I've written the amounts correctly. Then we have rent received. Rent received is other income. That of Birds is 540, but there is adjustment. So I'll keep it in inner column. Why? Some amount of rent received by holding company is actually paid by subsidiary. For subsidiary, it is expense. For holding, it is income when you treat them as two separate entities. When you make them one single entity, it should not be written as expense and income. Eliminate expense and eliminate income. So I'll write in other income, I'll write rent received. That of Birds is 5 lakh 40 in inner column. I'll eliminate that intercompany transaction, and later I'll add Rooster Limited's rent, which is 0. And then I'll write it to outer column. Right now I don't know. So right now I haven't written it. And I won't even total my other income. Why? There is some other non-operating income also which will come in this. So don't close any notes to accounts. Keep them all open till the end of the question. After rent received, we have general administration expenses. Shall I write in other expenses? 281 500 and 1 lakh 98. 1 lakh 98,000 as an adjustment. So I'll take you all to other expenses. I'll write general and administration expense. Bird Limited 281 500, and then that of Rooster is 1 lakh 98 inner column. Amount is not total, not written to outer column. There is some intercompany transaction. I will eliminate it and then post it to outer column. Only then I'll take the total. No hurry for total. Clear? What do we have after general administration expense? Selling and distribution expense 2 lakh 21 and 90. 90 has adjustment. So 90 will be in inner column. After deducting or eliminating that intercompany transactions, only then it will be posted to outer column. Is that fine? And selling and distribution expense is other expense. Do you agree with me? I would write selling and distribution expense. That of Birds is 221. That of Rooster is 90. I would have to eliminate intercompany and only then I'll post it to the outer column. Everybody? Nice. Then we have dividend income. Dividend income is other income. It is not revenue from operations. 135 has adjustment. It includes some dividend received from subsidiary. So I'll keep it in inner column. Then adjust it. If it is pre-acquisition dividend, it should go to reduction of cost of investment in cost of control. If it is post-acquisition, it can appear here. Right now, I don't know. Only when I read the adjustment, I'll get to know. 135 of holding, 28 of subsidiary. I'll take you all to other income. I would write here dividend income. That of Birds 135. That of Rooster 28. I'll keep that space open for the adjustments which I would have to do later. Is that okay? What is next? Then we have finished goods. Finished goods will be used in identifying our changes in inventory. Changes in inventory is opening minus closing. I will take opening of holding and opening of subsidiary together. And then I'll take closing of holding and closing of subsidiary together. And then deduct. Or you can individually take changes in inventory of holding, opening minus closing, changes in inventory of subsidiary, and then take the net as well. But we are preparing P&L for entire entity as a whole. So opening of both entities together, closing of both entities together, and then do opening minus closing. That's more appropriate way. Shall we do it that way? Unless we have no information. So changes in inventory, opening stock. How much is it of Rooster? How much is it of Birds? Rooster is, sorry, first we'll write Birds. Birds is 3 lakh 35 and 1 lakh 20. Together I can call it 4 lakh 55. Now I'll write closing. How much is it of closing? Birds is 7 lakh 85. Can I say Rooster is 2 lakh 90? Together it will be 10 lakh 75. This has to be the minus amount. I can actually close this note right now, but however, we'll close it later, like all other notes to accounts. Next, last item in the table like trial balance or trial balance like table, non-operating income, which will appear in other income, 238 and 57. But 238 has an adjustment. Some intercompany elimination is there. So that will be in inner column. I'll give space also for intercompany elimination. Generate non-operating income 238 and 57. Where? In other income. In other income, I will write non-operating income. I'll write birds 238, space for intercompany elimination, rooster 57. Later I'll post it to outer column. We're done with the table. Now we have cute little 1, 2, 3, 4 adjustments and we're done with 10 marks if I'm not wrong. 10, 10 marks. 1st of April 2022. That is at the beginning of not current year, 2 years before this year. Sir, how can you say that? We are doing consolidation as on 31st of March 2025. So is this the first year consolidation? No. It's been about 2 to 3 years over ever since we became the holding company. How much of the shares did we acquire? 2,500 shares have been acquired and shares are of nominal value 100 each. Come to this table. Okay, now how many shares are held by Bird Limited? 2,500. They're telling each share is of rupees 100. So each share, if it is of 100, 3 lakh divided by 100 will give us 3,000 shares. So subsidiary company actually has 3,000 shares in their share capital. In that, if 2,500 is held by Bird, minority will hold how much? 500. Do 2,500 by 3,000. 83% of the shares are held by us. 83 exact. 83 point. Very good. Okay, let me make it like this. 2 digits. Okay, now minority holds how much percentage? 16.67 percentage. How much percentage of shares do minority hold? 16.67%. This will help us in determining the profit of the subsidiary which actually belongs to minority to be deducted in our consolidated PL. Okay, we'll come back to this adjustment later. Or in your consolidated PL, if you observe, you will write revenue from operation, other income, total income, list of expenses, total expenses. Net profit will be found. You would have to deduct minority share. How much will be minority share? 16.67%. How much percentage? 16.67 percentage of profit. How much profit? We don't know. We have to find it later. 16.67 percentage of profit of subsidiary should be deducted from the consolidated PL before you transfer it to consolidated balance sheet. Okay, we've done a similar question in our AQs. We can recall. BD. Next adjustment. Rooster Limited paid a dividend of 12% for the year ended 31st March 2024. Dividend was correctly accounted for by Bird Limited. Bird Limited has correctly accounted it. We don't have to do any adjustment. Do we have to do any adjustment? No adjustment. However, I'll still compute that amount of dividend to you to make you understand. Observe, share capital of Bird Limited or Rooster Limited. Who has paid dividend? Rooster. No, paid a dividend. Rooster is the subsidiary. Am I right? Yes. Oh, sorry. I should write here share capital of Rooster. How much is the share capital of Rooster? 3 lakh. I'm going to say share capital of Rooster held by Bird. Okay. Or I'll write share capital of R Limited held by Bird. Held by B. How much do they hold? 2 lakh 50. In 2 lakh 50, how much is the dividend percentage? 12%. How much is 12% of 2 lakh 50? 30,000. 30,000 would be income to holding company. Am I right? Dividend paid to subsidiary company. See, if there are two different entities, subsidiary company's profit will decrease, holding company's other income will increase. Okay. But when you do consolidation, it is not an income to holding company. So holding company dividend income would have included this income. We should eliminate it. Sir, why do you think it is included in income? Because this shares were acquired in 1st of April 22. Dividend is given for the year 23-24. This is post-acquisition dividend. Post-acquisition dividend should be taken to P&L. Pre-acquisition dividend should be deducted from cost. Therefore, they've done correct treatment. So the dividend income of holding company includes 30,000 dividend received from subsidiary. Holding company's dividend income 1,35,000 include dividend received from Rooster. How much? 30,000, which should be now eliminated. Why? Because it is post acquisition dividend. So should it be deducted from the expense of subsidiary? It is not expense. In appropriation, it will be adjusted. Think of it in balance sheet consolidation, not here. It is appropriation of income for subsidiary, income for holding. Holding company's income you would have to eliminate because you are doing consolidation. I have eliminated this. Now tell me how much is 135 minus 30? 95. Sorry, 105. 105 plus 28. Can I say 133? 133 is dividend income. Everybody got this? Say something, please. What do we have after this? After this adjustment, Rooster pays rupees 11,250 per month to Birds towards rent for the portion of the premises occupied. How much is the rent? Rupees 11,250. Who's paying it? Subsidiary. In subsidiaries administration expenses, it will be included. General administration. I'll assume that it is included in this. Subsidiary has booked it as expense. Holding company has booked it as income. When you see them as two separate entities, subsidiary expense, holding income. When you consolidate them into one, no expense, no income. Eliminate from expense, eliminate it from income. 11,250 per month for 12 months. 1,35,000 will be eliminated from expense of subsidiary. How much will be general administration expense now? 281,500 plus 198 minus 135. 500. And this is income of holding company. Holding company in its other income or in other income not rentally include ಆಗಿರುತ್ತೆ. We'll eliminate it from here. 11,250 into 12, 1,35,000. 540 minus 135, 4,05,000. Did everyone get this? By this, I am done with this. I'm done with this. I'm done with this also. Last one. Selling and distribution expenses of Rooster include 15,000 received from Birds. Whose income should I eliminate? No. Selling and distribution expense of Rooster. Yeah. Rooster's expense, Birds income. Come to expense, selling and distribution expense in other expenses. In Rooster, I will eliminate 15,000. How much is that now? 221 plus 90, 311. 311 minus 15, 296. Am I right? This 15,000 will be deducted from income of Birds. Come to other income. In other income, it is not rent, it is not dividend. It is other non-operating income. I'll eliminate that 15. Do 238 minus 15, it will be 223. 223, 230, 280. 280 will be non-operating income. Done. We're done with all the four adjustments. Prepare consolidated PL. Yay, almost everything's done. But still one beautiful working note is there. You'll understand it. I've taught that to you also in the class. Let's see if you people will catch it before me telling. Tell me how much is revenue from operations? 28 lakh 40 plus 10 lakh 40. 38 lakh 80. 38 lakh 80 will appear as revenue from operations. Shall we go to other income? Observe other income 4 lakh 5 plus 1 lakh 33 plus 2 lakh 80. 8 lakh 18. Let me write 8 lakh 18 as other income here. Take the total 38 lakh 80 plus 8 lakh 18. 46 lakh 98,000 is the total income. Let's see expenses to begin with purchase of stock in trade. Come to note number 3, purchase of stock in trade. 10 lakh 90. Shall I write 10 lakh 90 to my consolidated PL? Note number 3, 10 lakh 90. Come to changes in inventory, which is note number 4. Come to note number 4, changes in inventory. 455 minus 10 lakh 75. This would appear as a negative amount. Write it in your consolidated PL also as a negative amount. How much? 6 lakh 20 minus. Write it in consolidated PL. Changes in inventory as minus 6 lakh 20. Come to the next item. Employee benefit expenses, which is note number 5. Bunny, note number 5. Employee benefit expense. How much is it? 11 lakh 53. Let's write 11 lakh 53 here. Last item. Other expenses. Note number 6. We have two items to be totaled. 344 500 plus 2 lakh 96,000. 6 lakh 40,000 Write 6,40,500 here. Take the total of expenses. 1090 minus 620 plus 11,53,000 plus 6,40,500. 22,63,000. So total income is 4698. Total expense is 22,63,500. Do total income minus total expense. 24 lakh 34,000. This is consolidated net profit, but this is not the consolidated net profit to be transferred to consolidated balance sheet. Why? We've taken 100% of the income, 100% of the expense, 100% of the profit, but of our subsidiary, only 83.33% belongs to us. 16.67 belongs to minority. So out of the subsidiary's profit, I should be deducting 16.67 percentage towards minority interest. Please don't do 24,34,500 into 16.67. 24,34,500 is consolidated entity's profit. I should take 16.67 percentage of subsidiary's profit. The subsidiary's profit, they have not given subsidiary's P&L. Welcome to working note number 3, where you are going to prepare standalone profit and loss statement of subsidiary. If you can recall, we have done a similar question in the class. Yes, right. Revenue from operations, other income. How much is revenue from operations? Hey, the standalone P&L is before eliminating intercompany transactions. Ignore all these adjustments. Take the data only from, yes, that table given. Shall we? Help. Sales is revenue from operations. How much is it? 10 lakh 40. Shall I take 10 lakh 40? Revenue from operations 10 lakh 40. Other income, there are two other incomes if I am not wrong. How many other incomes are there? Two. One, rent received, which is 0. Dividend income 28,000 and other non-operating income. So can I say 28,000 and 57,000 is to be taken? I would write here 28,000 dividend plus non-operating income 57, together 85. 10 lakh 40 plus 85, 11 lakh 25,000 is total income. Expenses. To begin with, I'll take purchase of stock in trade. Shall I? How much is purchase of stock in trade? Purchase of stock in trade 1 lakh 75. I'll write 1 lakh 75. Next, changes in inventory. I should do opening minus closing. Am I right? Yes, sir. Yeah, opening is 1 lakh 20. Closing is 2 lakh 90. So I would write here opening 1 lakh 20 minus closing 2 lakh 90 minus 1 lakh 70. After that, the next item is employee benefit expenses. Am I right? Salaries. How much is salaries here? Salaries here is 3 lakh 78,000. I hope you people have not forgotten the format of PL. Should we do one more game of like balancing the PL? No, determining the profit. 3 lakh 78 salaries done. Next, last item, yeah, other expenses. What items are to be ignored? See, capital is ignored. What is there at the beginning? Then we have general administration expense 198, selling and distribution expense 90. 198 plus 90. Other expenses 198 plus 90. 288, everything is done. If you observe the subsidiary column, everything is marked in yellow except first one. What is it? Share capital. Share capital will not come in PL. Take the total of expenses 175 minus 170 plus 378 plus 288. 6 lakh. So total income 1125. Total expense 671. How much is net profit? 4 lakh. This is the profit of subsidiary from standalone PL before eliminating intercompany transactions. Of this 16.67, correct? 16.67 percentage belongs to minority. So I would write that profit what we determined there. How much is that? 4 lakh 54. Deduct it here. 1 second. I will make it 16.67%. 75,862 of this 24,34,500 belongs to minority. If you deduct that, whatever the profit you get as per consolidated PL is the profit to be taken to consolidated balance sheet. Take 24,34,500 minus 75,862. 23,58,800 and this is the profit to be transferred to balance sheet. The way we solve consolidation of balance sheet and consolidation of PL questions is slightly different from how it is usually presented in the study material or any other reference book. So if you have learnt it from me in the past, then this should not be a difficult part at all to you people. Is that fine with all of you? Fantastic. Yeah.